The 2021 real estate market is so competitive. It seems like a bubble. It's hard to find deals. Prices keep rising. Now, I know you've probably heard that from other house hackers, investors, people you know, and maybe you've even thought it yourself. Well, this video is not about complaining about that, talking about why that is. It's actually about 3 different strategies that you can use to be competitive, to keep finding good deals, even in 2021. And we're gonna get started right now. Welcome to Coach Carson TV. My name is Chad Carson. You can also call me Coach, and this is a channel all about investing in real estate, achieving financial independence, and doing more of what matters. If you're new here, be sure to hit that subscribe button and the little bell so you don't miss anything. I have new videos that come out every Friday morning. Now, I made a recent video last week all about how making predictions about the real estate market is kind of a foolish thing to do. It's entertaining, it's easy to complain about what's going on, but really what I talked about in that video is that a better approach, one that you can control more, is to be prepared no matter what happens. If the market crashes, if the market stays flat, if we have a lot of inflation, the smart investors of the long run, the Warren Buffetts of the world, are prepared and they pay attention to what's happening, but they're prepared for anything. And so that's really what I want to go into more depth in this video about, is 3 specific strategies that I think you could be preparing for, you could be using right now to help you get a competitive edge. The first strategy that I want to talk about that we should be paying attention to as real estate investors is favorable financing. So yes, let's acknowledge that today's prices are a lot higher. They're going up every single year. It makes it more difficult to find investment properties that make sense. Yet at the same time, the opportunity is that interest rates and financing are the cheapest I've ever seen them. They're at all-time lows. You can get 30-year financing in some cases if you have good credit, a good job, and you're within the limits of what the lenders are looking for. You can get 30-year financing in the 3% range, 3.5% range for an investment property. That's incredible. And if you think about the long-term strategy of real estate, if you can find a property that if you owned it just free and clear, if you just paid cash for it, if it made a 5 or a 6% return, meaning after you paid all your expenses, it paid you like a dividend of 5 or 6%. If you can find a property that does that, and you can borrow money at 3%, you're using the bank's money, the 3% money, to make 6%. So you're making a margin on the bank's money. And if you buy in a location that has good long-term potential, where the rents get higher and higher and higher, and the prices get higher and higher and higher, that is a recipe for building a lot of wealth. So yes, you gotta find properties in the right locations. Yes, you gotta find properties where they still produce some kind of cash flow so that they can give you a margin to pay for your debt and still have a little bit of cash flow. But if you look hard for that, and you can lock in this really low interest financing, that is an incredible opportunity. Now, one of the challenges that you might find is that in a competitive market, getting that traditional 30-year financing or an FHA loan on a house hack or something, it's great if you can get it, but you have to move fast. It's really difficult because those loans typically take longer. There's a lot of appraisals that are and inspections that go along with them. So you might have to adapt and use strategies like the BRRRR strategy, which is to buy, remodel, rent, then refinance down the road, and then repeat that. So essentially what I'm saying is you might need to get alternative sources of money on the front end. Maybe that's a home equity line of credit. Maybe that's using private lenders, which I'm going to talk about here in a second. Hard money lenders, which are kind of institutional private lenders who charge higher interest rates, but they can move really, really quickly. Or some other form of money that's quicker on the front end so you can get the deal, so then you can then refinance later on. So that's the idea. Traditional financing is great if you can get it, but it's kind of a slow money. It's a long-term money. So sometimes you have to use other money and combine it with some other money to get the deal. And so let's talk about that other money that we often think just about traditional financing. But in my own career, I got started right out of college. I didn't have a full-time job. I just got into flipping houses out of college. And so getting loans consistently like the traditional financing wasn't my strength. So I had to go to partners, private lenders. I had to go to people who had self-directed 401ks or IRAs and ask them to loan me the money instead of me going to a bank. And those types of opportunities with private lenders, seller financing, working with a seller to finance you the property, is something a lot of people aren't familiar with, but is a great opportunity. And it's something you can do. You have to learn how to negotiate. You have to learn how to make a value proposition to people. But if you can learn how to do that, and I've got a couple of video links from my other YouTube videos about how to do seller financing. how to do lease options, how that works, and why it might be beneficial both to you and the seller. And if you can learn that, that's another opportunity right now. Because think about the alternative. Somebody has their money sitting in a retirement account, and maybe some of it's in the stock market, but they're a little bit nervous about putting all of it in there. And then the other money's in a CD making 0.5% interest. If you could pay them 3, 4, 5% interest and still make it make sense on your deal, do you think that might be an opportunity? Of course it is. So there's trillions of dollars of that kind of money sitting on the sidelines, either in private lenders or also to sellers who are going to sell their property. Let's say a landlord is selling their property for $300,000 and they're just getting out of it because they don't want to manage the property anymore. What are they going to do with that money? Are they going to go put it in the stock market? Are they going to go put it in a CD in the bank? They might not think about it right off the bat, but if you can make an offer to them to sell or finance that property to you and essentially be a money partner with you over the long run, they can start getting a check on the first of every month while you take care of the tenants, while you do the maintenance on the property, and it can be a really good long-term partnership. That's how I did a lot of rental deals early on in my career in 2004, 5, and 6 when we were in a similar kind of rising market. And I found sellers who had built up a lot of equity but wanted to transition out of the landlord business. So those are just some ideas there. A strategy is to pay attention to the financing. The financing and the terms that you buy a property on are really important, especially if you can make more on the property than it cost you to buy it in the first place. Now, before we go any further, I want to pause for a moment and ask you in the comment section below, what type of financing are you using for your real estate purchases? Or if you haven't made a purchase yet, what type of financing would you like to use? And if you like what we've covered so far, be sure to hit that like button, help us spread the word on YouTube. I would appreciate that. The second strategy that I like to cover for how you can be successful as an investor, even in 2021 in a hot real estate market, is a very specific thing, and that's trying to buy properties from lazy landlords. Yes, I said it, and I've even been a lazy landlord myself. What I mean by this is we've been in a market where rents have been going up consistently year after year. If you're a landlord, you've probably noticed this. But what happens is landlords, particularly longer term landlords who've owned properties for a while, who manage them themselves, there's a tendency to leave the rent the same, particularly with a long-term tenant. And sometimes that makes sense, right? If you had to turn it over, it would cost you money to do the turnover. But when rents are going up so much, that gap between what landlords leave their rent at and what the actual market rent value is gets bigger and bigger and bigger. And so what you're looking for with lazy landlords is find a landlord who's kind of burned out, they're done with being a landlord, or they might be interested in that, and buy a property where their rents are, for example, $1,000 a month, and you know the rents are $1,300 per month if you just did a little bit of sprucing up and improved the property. Now, what that does for you is that allows you to buy a property maybe on the surface that the cash flow is not quite so good. Maybe you're just breaking even with the current rent, but by getting it to market rent, increasing it $200 or $300 a month, maybe now you can have some cash flow. So this is an opportunity, both with single family houses, mobile homes, also older multifamily properties. You will find landlords in this situation. So find different ways to reach them. I'm going to talk about that in the third strategy of looking to how to find sellers of properties, but be on the lookout for landlords who fit that description, because that's a really good opportunity. There are a lot of people out there. I know several of them personally in my market who are doing that. And if you can find a way to make an offer to buy that property, particularly if you go directly to them rather than just waiting for them to decide to sell it, you might catch them at a time where they'd be happy to sell and perhaps even do what we talked about in the previous strategy. Maybe they'd be willing to sell or finance and pass the torch to you as somebody who can buy that property and give them an interest payment every single month without all the hassle of being a landlord. The third strategy is really simple. In a market that's competitive with a low supply of housing, you've got to look at off-market deals. If you're just going to wait on the MLS, which is a multiple listing service where the realtors list their properties, or if you're just looking on Zillow or one of the big databases, you're not going to find the best opportunities. So what do you do? How do you find these off-market opportunities? I'm going to give you a few examples of strategies that have worked really well for me in the past and that I think are very relevant for all of us right now. I'm going to give you a short list of campaigns, or you could call them marketing strategies, for how to find sellers who might be interested in selling their property, yet they haven't listed it out on the open market with a realtor. A common theme with all of these is that you're trying to find sellers who aren't necessarily holding out and trying to get top dollar for their property, but they're somebody who has a little bit of motivation, or they're willing to work with you directly. That doesn't mean they have to be desperate and trying to give their property away. That just means you can talk directly to a seller and negotiate and make a deal. That makes a big difference than trying to compete with 100 people making a bid on a property that's on the MLS. So let me start with one of my favorites, my all-time favorites, something I've done my entire career, and then if you were to drop me in a new city, would be something I would do at a low-cost way to find deals that I would start day one. That is called driving for dollars, or in my case, I like to walk for dollars, just go out in the neighborhood and walk around. I've got a link to a video that I did about driving for dollars if you want to go into even more depth about it. But the general thing that you do is take an hour or 2 or 3, maybe in the evening, on the weekend, and you basically map out the neighborhoods where you're trying to buy properties. And you just start going street by street, walking down them, driving down them, and you're looking for a few particular things. The best thing is to try to find vacant properties. So if you find a property where the grass has grown up, or there's newspapers kind of sitting on the driveway, or if you can tell there's no stuff in the garage, and there's some different warning signs about, hey, that's a vacant property, write that down. Write down the address of the property. If you see any neighbors out in the yards, talk to the neighbors. And what you want to do is you want to try to get in touch with the owner of that property to see if they'd be willing to sell it. There could be all sorts of reasons that a property is vacant. Maybe it's in between tenants. Maybe they inherited the property. Maybe they moved out of town. Maybe they are having to move out because they can't afford the payments on the property. You'll find all sorts of reasons, but in most cases, having a property sit vacant costs them money, it costs them stress, and you being a buyer who's interested in buying it directly from them could be a solution. So you can build a list of properties that are vacant, but even properties that people live in that are kind of run down, where you have a lot of nice houses in the neighborhood and 1 or 2 of them look like they need a lot of repairs. You can make a list of those properties. You could find for sale by owner signs in yards, or for rent by owner signs to find some of those lazy landlords perhaps. So you're looking for all 4 of those things: vacants, fixer-uppers, for sale by owners, for rent by owners, and you're just proactively reaching out to owners, either on the phone, by talking to neighbors, or by sending them a handwritten note. And if you get enough of those properties, you'll start finding some sellers who want to sell your property that might be a good deal. Another strategy that I've used a lot in the past that I think is very relevant today is something called expired listings. Now, if you're a real estate agent, one of the strategies you use to find new listings is to look on the MLS and find any property that's been listed for 3 months or 6 months where it didn't sell during that time period. And once it doesn't sell, it goes off the market and they're no longer listing it with that realtor. That seller or that owner often gets a barrage of mail from other real estate agents who want to list their property now. Well, you could get in that mix and make yourself a little bit different by sending them a handwritten note or personalized note that says, hey, I'd like to buy your house. I don't want you to list it. I want to be the buyer directly. And if they've had it on the market for a while, they might have a little bit more motivation. Maybe there was something wrong with the property that you could then fix. And so it's sometimes an opportunity, not always, but expired listings are not common. They're not something you see every day in a market like this particularly, but if you pay attention, ask your real estate agent. I used to use my real estate agent to send me expired listings, and if I bought one from them, I would pay them a small fee. So it's not very hard for them to send you those expired listings, and then they count on you to pay them a small fee whenever you buy the property. So expired listings is another way to find off-market deals. A third campaign that I really like in today's market is something called Eviction landlords. You might have read in the news that around the country during COVID, it's been a hard time for everybody, tenants in particular, if they're losing their jobs, but also the landlords who are having to rent these properties. Sometimes they're not getting rent from their tenant while they're having to continue making mortgage payments or paying taxes or maintenance on their property. That can be a really frustrating situation for landlords. And so if they finally start filing an eviction, or if they have an eviction that was filed a long time ago and it's been caught up in court, you can go look at the public records. You have to look at your local municipalities, see what's allowed and what's not allowed, but you can find the eviction records and you can reach out to those landlords and say, I would like to buy your property if you're looking to sell. So if you catch somebody at the right time, where they're just frustrated with it, they're done with it, this might be a good opportunity for you to buy the house from them, particularly now with a lot of the situations that have happened with evictions. And then last but not least, because there's a lot of different strategies you could probably look up to find other ways to find off-market deals, but here's another one I think that might be good for today's market, and that's reaching out to people who might be behind on payments or about to be behind on their payments. Now, I need to give a warning that every state has a little bit different rules on this, so you need to check out your state laws on how you can reach out to people and what's allowed and what's not allowed. But given that, there is a situation where if somebody has built up equity in their house, they've owned it for a while, but now something's changed in their life where they lost their job, where they had to go to another job that makes less money and they can no longer afford this property, it might be smart for them to sell the property, go to another house that either rent or buy another house before ruining their credit, before losing all their equity at foreclosure. And you as an investor could be a solution to buy that property quickly from them. And it could make sense, especially if you're buying it directly from them, to sell it at a little bit lower price, and especially if it needs work, and they can sell it as is, not have to do any of that, and just kind of get out from that bad situation. So salvaging some of their equity in order to not lose all of it is the idea there. So buying properties in a pre-foreclosure or just before somebody gets into a foreclosure situation could be an opportunity. It's an unfortunate situation if you're in their shoes, but put yourself in their shoes and think about it. Like sometimes selling and moving on could be the best solution. So that's another opportunity where you can reach out to people directly through letters, maybe a phone call, to try to buy their property. So those three examples, finding favorable financing, looking for lazy landlords, and then looking off market for your deals instead of just following the crowd and looking on the MLS or Zillow, those are three specific strategies for how you can still thrive and do well, even in 2021. And I guess the takeaway from all of that, the common theme, is that investors who really succeed and continue to succeed are people who can adapt, who see opportunities in whatever the market gives you. So it's really easy to complain. I know I'm susceptible to it as well, and to kind of feel like the forces of the market are kind of taking over and you can't do anything about it. But find a way, be around people, watch videos like this that look for the opportunity instead of just paying attention to what's happening to you. There are things you can still control that you can still be proactive about. So I hope you take that away. If you like this video, be sure to hit the like button, help me spread the word, to share it with others on YouTube. And if you're new here, be sure to subscribe, hit that subscribe button and the little bell next to it so you'll be notified every Friday when I have new videos coming out. And if you like this video about the 2021 housing market, I think you'll like another video I made about why making predictions about the housing crash is foolish, and I share what to do instead. So you can get that in the link below in the description. I hope you check that out, and I hope you'll come back again. This is Coach Carson TV, and my name is Chad Carson. You can call me Coach, and this is a channel all about investing in real estate, achieving financial independence, and doing more of what matters. See you next time.